Stock nerds and market lovers. It's April 1st, and I'm not really much into the April 1st jokes. By the way, welcome everyone to another edition of Your Money Radio. Don Vandenbord, Hunter Mozingo, Danny Stewart. I'm here with you, Tim Reazor. Whenever you're listening to us, we're live with you, always on your shoulder, in your ear, giving you what we think is the most practical, applicable, actionable market guidance, thoughts, and advice ever derived in the history of audible form market talk. So
and video form now too.
Oh yeah, in video form, any form of media, we're the best. And so let's just throw that marker out there right now. Yeah. So I'm not much into the April Fool's jokes. They're pretty hard to conceive. I don't think I do a good job of pulling them off. The best
takes creativity, Tim.
Wow, hurtful feelings. So I was going to say the best one. Danny had a business partner not years ago. He passed away, unfortunately, and he was skeptical of everything. Is the nicest way to say it.
Yes.
And so I never got to do it because he ended up passing away. But he was so skeptical of everything that when I was going to tell him that April Fool's, that when you go to the urinals in a men's room and there's a blinking light and you think it's the sensor to trigger a flush after you walk away, that's actually the government spying on you. And there's a thought that he would have believed it. But then Danny comes into the studio this morning and just...
I'm glad you didn't tell him that. He would have started bringing in a...
he would have covered it.
Milk carton and used that and then poured it down the sink. So thank you for not...
Going to the office building with tin foil into the bathrooms every time. Why you bring tin foil to the bathrooms there, Kofal? Well, I don't want the government watching, maybe. But Danny comes in, and this is one of those things where there's the best humor has an element of truth to it. And so if I told folks that Danny has more, we're talking about what's hanging on Danny's wall, and it became, I don't know how, show Don on the screen. So Zach compliments Don, says, Don, you look great today. Love what you're doing.
Good background.
Good
you got
background.
Bondor back there? Yeah, that's good.
Everything's going well. Coming up roses. And Danny chimes in with, you need some stock certificates on the wall. And which then led to, that was, if you didn't get the Danny translation, you need some stock certificates on the wall. And where most people have pictures of their kids, like fun things, something to surround themselves in warmth and in a glow. No, Danny has a wall of failed companies hanging on his wall. And
as a reminder.
As a reminder of how bad life can suck. And if I said that it's just so, it never struck me. I've known Danny for a long time now, and it never struck me that most people have loving things on the walls. No, Danny wants to be reminded of the Great Depression. Yeah. And then to top it off, if I said to you, stock nerds, and you would think it's an April Fool's joke, if I said to you, what's Danny's crowning achievement hanging on his wall? And he breaks out without missing a beat. Oh, it's the end. Tell them what's hanging on your wall.
No, well, I've got all kinds of stock.
No. You cover what's on your wall.
I want to give a little background here.
You just tell them what's on your wall.
No. I've got an Enron stock certificate, and I've got the Code of Ethics and the Employee Handbook. And listen, the reason I did that is I had so many people. We never owned Enron for the company I used to work for. And I had all these people come in with their 401ks, and they work for their company, Jesus. Tim, and they'd have literally 80-90% of their 401k in their own company stock. Crazy. And so I got that to say, all these people lost their life savings in Enron, even though they had S&P 5. They had all these other choices, but they just believed in their company so much.
I know the practical reason why you have it hanging on your wall. Yeah. But God almighty, now I think every Christmas...
I had to pay for that, by the way.
I'm just going to get you handbooks of companies in America. Blue Cross and Blue Shield's employee handbook.
Yeah. And then the 2008 Wall of Shame, the banks, and the American Airlines, and all the companies, General Motors, all the ones that went belly up.
Yeah. Danny, you have any pictures of your family up here? No, but I've got this Enron. Tons of them is not right. You have...
Oh, my God. Tim, that's not true. I've got pictures of my wife, my kids.
You have a couple... And they are very old.
He has tons of them, but they're all holding stock certificates.
Oh my gosh!
Now that's what we need to do.
Oh, you're kidding.
Have my wife up there with a big stock.
Let me paint.
That's the next Christmas card.
Better yet.
That's the next Christmas card.
There you go.
Do you ever guys see that meme where it's the fella sitting at a bench or a table in a park says, change, like, Enron's a good company, change my mind. Yeah, whatever that meme is, Zach, if you could pull that up or whatever that is, that's going to be on the tile this week. Danny, if you could just have your wife going, AK's a better driver, change my mind. Like, we should have your kids with family portraits of failed stock companies. Pets.com.
Yeah, pets.com. There you go.
That would be Sid. Sid loves dogs. Sydney is Danny's, one of Danny's daughters, and she loves animals, but Pets.com is a perfect fit for Sydney.
There you go.
Rivian? What's the next car company to fail for AK? Anyway, if I told folks that was, they would think it's an April Fool's joke, but no, Danny has failed companies adorning his walls.
Historical.
It is a unique little gallery of.
I've actually got a very nice book. It's the art of stock certificates going back all the way to the early 1800s.
You know, we could get more of those, start charging admission to come see America's failures, you know, as a museum up here in the office.
It's stocks to avoid.
That would be a good April Fool's gag. You guys start charge admission at the door. You can come in one day a year and see the wall of shame.
You know, just for the office folks here, like it actually looks like a college campus where we office, and we should put next year. God, why didn't I think of this year? Well, that's because I didn't talk to you about it beforehand. Velvet ropes outside, as if we're having
a movie, private admission only.
Yeah. So stock notes, market offers, lots going on. Look, I didn't anticipate. See, I always
left turn for 10 minutes.
No, I didn't anticipate. So I always have a piece of, when you wake up in the morning, you don't want to deal with the world. You need your cigarette. You need your cup of coffee, right? You need to kind of just glide in there, right? And I normally have a piece of nonsense to talk to you about, but you've usurped my pre-planned nonsense. And I really wanted to discuss it.
And I just want to tell the listeners you're welcome.
You have failed companies that don't. I don't know if you're coming out the winner here. Like
I didn't own any of those
pictures
companies.
on your wall.
I didn't own it. That was historical. I didn't own any of those companies.
I think some of the kids in those pictures they came with the frame. That's how old they are. I don't know if you're the winner here, but there is a lot of confusing talk going out with the stock market right now, and I do want to address that. We'll talk about the quarter, a bunch of other things, and I there's some really interesting thoughts on the Russian ruble, which might not sound interesting, but I believe it's very interesting and very relevant. But real quick, 210 inversion, like you're hearing, this is what people do at cocktail parties,
right?
Okay. Did you see the 210 split today, Bob? And and they don't know what the hell they're talking about. And recession. And then like the guy at the other, at the punch bowl says, death cross, and they're just throwing out
just words
things that they've heard on Bloomberg or CNBC. And I thought, just for a minute, what it might, real simple, plain language, what it means. I don't need to read all this, but the bottom line is, when you get a yield inversion, like the way we're having it, I'll show you two things, and then I'll let Danny talk to it for a second if he has anything to add. So you can, and these notes, by the way, these links, they're going to be on the website, on the video. I'll make sure Zach incorporates them. Gosh, what is going to be the chapter title of this segment, Zach? I can't wait. If you don't pay attention to the YouTube video, you're missing out. Zach puts little jokes on there, and when Danny was gone, and we were talking about how he took the family roadster out to Colorado, we had such a good laugh over it. Zach titled the segment, Danny's a cat. What did you call it? Eldorado Enthusiast. Dan Store, Eldorado Enthusiast. I cannot wait to see what the title is. Back to yield curve. So when it inverts, it's no different than the VIX inversion, where shorter term is pricing out more.
Short-term interest rates, higher interest rates than long-term.
And it's the same thing here. And I won't read this to you, but I will make sure that it's in the notes. But this is more apropos. I can give you an academic definition, but let me give you just a little bit more practical definition. In general, here we go. In general, right here, a simple way to look at the importance of the yield curve is to think about what it means for the bank. The yield curve measures the spread between a bank's cost of money versus what it makes lending it out. And so if the banks can't make money lending out, lending then slows, and then the economy starts to slow. And Danny's going to break it down even further.
Here's an even easier way to think of it. If you're a lender and you can lend money out at 4% for a month or 2 months or a year or 2 years, but for 20 or 30 years of risk, you can only get 3%. Why would you make a long-term loan and have more risk and make less money? So it's all about the time value money. So the yield, when long-term rates drop, partially that means that investors believe that the economic outlook is bad, things are going to slow, and they get defensive, so they buy longer-term bonds. There's been a lot of talk about what has caused the yield curve. A lot of it is quantitative easing because of the Fed, which quite frankly created this monster to begin with. They actually, with quantitative easing, bought Treasury bonds and artificially pushed down the yield.
And there's also, I believe, something exacerbating this a little bit, and it's been folks potentially selling bonds. And why would they be selling bonds if they're looking for safety? For years, generations, folks come into the U.S. government bond market because it's safe, right? Like we're not going to default on our bonds. I think the only threat of default, which was highly a big misnomer in 2012, right? When didn't S&P downgrade the U.S. for like a
double A?
Yeah. We went from AAA to AA. So, but now I think the dynamic has changed. I think that when we start doing what we're doing with the sanctions, right? And if we deem what you're doing to be a bad actor, this is a slippery slope. I'm not, by no means am I saying what Russia has done is good. I just don't misinterpret my words. There's going to come a day, though, where where we're going to impose sanctions on people, and we're going to freeze their assets, and it's going to be questionable. Right now, it's not questionable. Of course, we want to do this. We want to stop Russia from invading Ukraine. There's no question about that. But there's going to be a moment in time in the future where we're going to freeze assets, whether it's a country or very powerful individuals or a firm or a business firm. Maybe they're just polluting data. See, it's a slippery slope. We've gone from invading to social like things.
Social justice.
Yeah, and so it's a very slippery slope. And my point being here is that there has been, I believe, some government bond selling, because why would you let your money potentially get frozen? And so you're selling.
But if there's selling bonds, rates go up, not down.
It's all cockamamie right now.
Oh, okay.
Yeah, and what I'm saying, what I'm really saying is these sanctions have screwed with this curve.
I would agree with that, and I would tell you, I would take the other side of that. I would think that some people that are really, really worried about the Russian-Ukraine thing think it's going to get out of hand. They would be buying treasuries. They would be fleeing to treasuries, and that helps push down the rate.
Yeah, I think that folks, and I know gold is pulling back a little bit today, they're selling treasuries and they're moving into gold.
I think they're buying both. That's why rates are coming down. Long-term bonds.
It could be. Yeah. We'll find out.
It's either the Fed or investors, one or the other.
We'll find out soon enough. And so that is government. That's the government stepping in, and I believe causing a disruption in that market. And now I think they're doing it with oil. If you go to the charts, and so the chart here of oil, and oil's just pulled back. The red line here is a 50-day simple moving average, and oil's holding support here, just around. We'll just call it $100 for a barrel of oil. I don't know if that's the new norm, if the century mark is where oil's going to be, but I view this as a victory for oil bulls. So Biden, and I don't know the time length. Hunter or Don, or does anyone know the time length of we're going to release 1 million barrels a day? How long are we going to do that for?
Next 6 months is what I saw.
Okay.
Basically up until the midterms, more or less.
Day after the midterms, they stop.
Yeah. Okay. Hunter, if you led with that, I would think that's the April Fool's joke. like they're going to stimmy oil until the midterms?
Yes. And do not be surprised.
Chicken tenders at your
midterms are in play. That's right. When there's
checks in the mail, Yeah.
Oh my gosh, that's astounding.
There you go.
They're going to stimmy oil and give you chicken tenders if you get super unleaded. That I didn't realize it was for 6 months. I know they're going to do it. And sometimes the jawboning, I didn't realize it was like, this is what we're doing. Like I saw the plan, but whether you do the plan or not is a different story, right? Like they were trying to talk down the oil market. The oil market said, no, we don't believe you. But the oil market down to the 50, you're like, yeah, it's in the oil market. Of course it's come down. Look, it was up here at 130. Now it's down to 100. That's a big drop, right? Right, but where did it come from since Biden took office?
50, yeah.
So
40.
we're still up pretty big time. And so this is part of the problem, though. This is all artificial. If the market truly is a vehicle that looks forward 6 to 8 months, this is releasing 1 million barrels a day for the next 6 months is just a sugar high. It fades, right? The energy from sugar fades. That's why if you're going to run a marathon, you eat carbohydrates, not Pixie Stick. Anybody remember Pixie Stick? Literally just a straw full of sugar, right? Surely they don't sell Pixie Sticks anymore.
Awful.
Oh, sure they do.
No. Remy.
They still sell junk food too. Lots of sugar, junk food, donuts.
Danny, it was literally a tube of sugar.
Yeah, and they still sell them. Kids eat sugar all the time, man. Don't you give your kids sugar?
Flavored sugar.
Flavored sugar.
You know what?
Let's keep moving.
Hold on. It literally is the worst of the 80s candies.
You can get Pixie Sticks on Amazon.com
What?
right now. Oh yeah, I'm looking at it.
Remington, his feet are going to eject off of his torso.
I know what we're getting Remy for his birthday.
Yeah.
That kid is so hyped. I mean, he doesn't eat sugar, and it's not like we're not a tote bag KPBS family per se. We don't give the kids sugar, and we only give them granola. No, like normal family. But I'm sure as hell not inject. Hey, Remy, open up. I've got a tube full of sugar to pour down your throat. He would literally set fire to the wood floors in the house. He runs laps in the house now. I'm not making this up. He literally runs laps right now in the house. It's ridiculous.
Everything in moderation, Tim. I think Remy's a growing boy. Sugar's good for growing kids, right? I mean, you're going to...
Sugar's good for growing kids.
Gives them energy.
What are you, the cocaine industry?
I saw it on the food pyramid back in the day. It's at the top, but it's there. I mean, it's right next to fats and oils.
God, that was the biggest scam ever, right?
God,
the old
it really
food pyramid,
was. Jeez.
right?
All the grain on the bottom. That's right.
Who? Like, it's like the farmers in Nebraska and Iowa came up. Like, they had a very strong lobby, right?
Oh, yeah.
So oil, I have victory for oil. So why won't this work? It's too faceted. So you want these companies to drill more, pipe more, do more. Energy companies do more, and what they're really saying is do more to lower the price of your commodity, right? And energy companies are like, wait a minute, I'm getting a premium for my product right now. Why would I do more? That's
well, but the other part is they don't want to expand and spend billions of dollars, and then as soon as this Ukraine-Russian thing is over, they're public enemy number one again, and it's all about electric.
I don't disagree with you. Yeah. But the point being is oil was going up long before Ukraine.
Yes.
Part two. If you produce Pixie Sticks, candy bars, automobiles, if you produce anything, and there's an overreaching body that can always come in and cause your demand to go down, to lower the price you're getting, what incentive do you have, one, to work with that body, and two, to do more? Imagine we produce number 2 pencils, and the government's like, you're not producing enough number 2 pencils, but we're getting like $1 a piece for these. It's a really good price, And then they're like, well, we're just gonna release the emergency supply of number 2 pencils, and you're only gonna be getting a quarter. It doesn't work. And then the counter argument to this would be, well, what if the government came in and said, we'll buy back the oil at X price in the future, so you're good. Well, if that was the case, everyone would be happy, but it's clear that with what price the government is willing to pay to buy back the oil they're releasing from the strategic reserve is not here yet. They're not buying it back at 100. They stockpiled it in the, what did the oil get down to? 30s, 40s, 30. Yeah. They were building up the reserves. They're going to wait. Well, wouldn't you wait if you were a business person? I mean, granted, now we're talking about the United States government, and maybe they're not making some of the best decisions, or maybe they throw them a bone and they buy it a little bit higher than 30s, 40s, and 50s, where they were stockpiling it several years ago. This is nuts to think that you're going to you're going to affect the private market. You'd have to crush the market in perpetuity, like in Venezuela, where they pay pennies on the dollar for gasoline because it's run by the government.
They don't want the people to revolt. Keep the people happy, or try to.
Well, that's no different here.
Yeah. No, I get it.
But the problem is because we have private companies running our energy, and they're not state-owned. Petrobras, Petro Biden. I feel like that's the nickname. That we're not going to lower the price of oil or gasoline significantly anytime soon. Something has to happen. What is that one event that Jay Powell could do over time to really lower the prices of energy, homes, and automobiles?
Cause a recession.
Oh,
raise rates.
Yes. And so now that brings me to my next thing, Daniel. See how I'm doing this? It's like a story unfolding in front of you, interjected with pixie sticks and your family photo.
But it hasn't been working because the rates started going up, and now they kind of.
Oh, I thought you said the story wasn't working. I was like, the story's working just brilliantly. And so now let me come to this chart. And so this is the CME countdown to, it's the Fed market watch tool. Okay. And so we've had a jobs report this morning. Okay. We had a inflation, the core CPE number come out yesterday, which hot. Buster Poindexter. Hot. Don's
Next.
wedding. What was Don's wedding song?
Keep going.
Was it hot? Or was it something off of a Kiss album?
It had to be Kiss.
So look at this, Daniel. This is astounding to me. So after the jobs report, okay, there's only a 26% chance that we're going to get 50 to 75%. There is a 75% chance that we're going to raise 0.75% to 1%.
You're reading that wrong. That's the target. That's not how much they're going to raise.
Current target is 25. Okay. Am I reading that wrong? 74% chance that they're going to raise 75 to 100% is how I always interpret.
I think what it's saying
that they're going to raise 275 to 100.
Okay, thank you.
So that would be a 75% chance of a 50 basis point hike, pretty much.
There you go. But they're gonna do that multiple times if you go out a few more months.
They won't.
Oh, you see, and that's where
they won't. They'll talk about it and they'll try, but as soon as they raise 0.5% and the market starts struggling and they watch the data to see what happens and it actually causes slowdowns and causes dislocation, they're going to say uncle.
And you see how that is so confusing.
Maybe twice, but it will not happen 3 times.
So the yield curve rate, but see, that's why it confuses. This is why I wanted to talk about it this morning. When people are like, if rates are inverting, they're supposed to be going up, right? Jay Powell's going to keep raising, and there's this yield curve issue, and there's what Jay Powell is. I mean, he's not hiding what he's going to do. Be aggressive.
Well, they've lied in the past, but okay. Here's what he's going to do to raise rates. If he really wants to raise rates, He's going to declare he's going to raise a 0.5 point on the discount rate, which is the real way he does it, not the federal. Then the Fed, that's a wink, wink, nod, nod for the banks to raise their overnight lending rate, the bid-ask rate, the federal funds rate. But that's going to raise short-term rates, which causes the yield curve to become more inverted, right? So what he's going to have to do simultaneously is stop the trail down on the QE, quit buying bonds so that the demand goes down so interest rates rise, long-term rates. He's got to taper and raise rates at the same time or he's going to invert the curve.
I think to sum that up, you're saying he's screwed.
I've been saying that for a long time. Yes.
I think that's where we need the I'm a damn genius.
He's got a Hobson's choice, man. It's a Hobson's choice. To kill inflation. Remember, he's been saying for 2 years inflation was transitory. I don't know what planet he's on, but he's blind and he's a terrible economist. He's a career politician economist. He has no idea what the hell he's doing.
I'm on a group text string for lack of a better phrase, that loves it when you. I have been trying for weeks to get you uppity about Jay Powell, and today is the day I succeeded.
Oh, please.
Boy, it was a long road to get there. It was filled with pixie sticks.
All you got to do is say, "Do you think the Fed is ethical?"
What is it? What is a Hobson's choice, by the way?
Oh.
That mean Hobson's choice means you don't have either way is a terrible choice. Hobson's choice means you're damned if you do, damned if you don't.
Well, my favorite is the Calvin.
It's named after Butch Hobson, third baseman for the Boston Red Sox back in the 70s.
That is true.
Don would know that.
No,
so why is that his? What was the backstory?
Yeah.
Or do you know?
It's not what it's named.
Wow.
I was gonna say, man, I think that's I heard that when I was a
Did
kid.
you see how I went in there with? That's true. Like I automatically backed up Don.
Wow.
I've learned.
You had no idea whether he was BS.
I
or
wanted
not.
to see if you'd bite.
Oh, please!
Wow.
You had no idea whether that was
By
true or
Danny's
not.
head, but Tim caught it.
I knew it.
Sound was
Danny.
gone by
Had me.
Danny's head.
I
Hook, line, and
expected Don
sinker.
to tell me, Danny. Don's going to now tell you that that the name Tony, comes from the shirt that was printed to New York, Tony. Tony.
Actually, I'm going to tell him that Occam's razor was invented by Gillette.
King Gillette.
There you go.
King Gillette.
Hobson's choice.
Yep. There is a lot that you're going to be putting on this meme table of Danny. Can you put Danny behind the park, on the chair, and something funny printed on that meme?
I'm working on it. I got the Enron logo. Changed my mind.
Maybe put some family portraits on there.
We'll talk about it. We'll send it down to the boys' lab. Send it to the graphics department. We'll get them going on
Hey, let's
it.
do some practical market things real
Yeah.
quick. And
There you go.
Then we'll
Thank you, Tim.
Wow, man. Wow, dude. You know how hard it is to get. I had to deliver what the people wanted was to see you get uppity about Jay Powell.
I'll do that all day long.
So look, this market's super interesting to me here. The rebalancing. I talked about rebalancing on the Wednesday video, by the way. Stock Nerds Market Lovers, the website revamped for you. You can see real quick. A couple people have asked about strategy. About if you want to see the portfolios that we manage here in house, Grotection, Robotection, and then you click that little button there and you get the hybrid portfolios. And you're like, oh, I have questions, and I happen to be on my phone. Well, you just hit this button and it connects you to put the Danny head up. Zach, it connects you to the Danny head. And Danny answers the phone, and Danny takes your emails, and he'll do it over the weekend. And some folks might think, well, how is Danny answering the phone if he's so busy? Because Danny cares most. Now I'm not being facetious. Cares most about you, the people that listen to the show, and
But not Jay Powell.
Yes, Danny has blocked Jay Powell from all his phones. And if you want to get a hold of us,
I
you
love
can
Jay Powell, for the record.
He's batting third for the Sox this year. You just go down to the leadership and you can scroll through all of our contact information and how to get a hold of us. So, with that.
You know why I like him?
Why is that?
Because he communicates clearly, whether or not you like the message or not. Janet Yellen, I could never figure out what the hell she was saying. Jay Powell, I just like the guy.
Sure. That's something
He
to
made
like.
one mistake back in the third quarter of 2018, and he realized his mistake. He corrected it, and there have been no huge shocks to the market since then. He telegraphs what he's doing. There's no surprises. He's really in a thankless job with all the money that the government printed, and he's in charge of trying to make sure there's a soft landing.
Danny, would you like to respond to Don?
That's fine.
All right.
What did I say that was not true?
Well, so the double speak by Bernanke and by Janet Yellen
I'm not talking about Bernanke. I'm not.
No. Hang on. You let me finish. So Bernanke learned from the master Greenspan, who was a master printer. Bernanke became a massive printer. Janet Yellen was a massive printer, and they caused this massive inflation.
And
they
have to print money because the U.S. budget overspends by $1 trillion a year now.
And I would argue that
What's
they
the
by doing all the QE and by dropping interest rates artificially, you're actually giving you're giving a green light and a hall pass to Congress to spend even more money because, quote, interest rates are low It's cheap borrowing. If interest rates were even normalized rates, it would hamstring Congress and not make them spend as much. Their
Moses
charter
could come down from the mountain again, and Congress wouldn't stop spending money. It's how they get reelected. The budget.
Well, that's a totally different topic. You're asking about the Fed's charter is to protect the dollar. That's what it's supposed to do. It's doing a piss poor job.
How is it not protecting the dollar? The dollar is holding up fine versus every other currency in the world.
Well, just because we're the strongest of the weak right now, Don, since the Fed was created, the dollar's
That's
lost.
That's the measuring stick, though. That's the measure. Every other currency has too.
Don, since the creation of the Fed,
inflation had been low for 2 decades. It just really got out of control with everything that was generated because of COVID. That's what spurred the huge move in inflation was post COVID.
So the tech wreck was caused by loose, easy money. Tech companies could borrow super cheap, and they created a bubble for the tech companies. The economic real estate crisis of 2008 was caused by loose money from 2004 to 2007. Okay, they keep printing
You're
money.
blame that on the Fed and not
damn
on
right I am.
The Congress that.
Well, they're both they're both evil.
Congress loosened and demanded the easy interest rates as part to make sure that more people could get mortgages.
I thought the Fed was supposed to be independent, Don. That's what they always say. We're independent. We're apolitical. Bullshit.
I sure, but they're not the ones that make the laws.
All I'm saying is their job is to protect the dollar, and let me finish. Since they were created,
hoping you would do that.
Since they were created, the dollar's lost 99% of its value. They're doing a great job.
Every other currency has too.
Well, yeah, that's why you don't want a fiat currency. You want it backed by something. It's true.
Dan, it's not 1960 anymore. We went off the.
Well, then you're a Keynesian economist. I disagree with. I'm an Austrian economist.
I'm just saying you can't put the genie back in the bottle. It's done. So you deal with the reality that we're at.
I agree with that. You got to deal with. I agree that you got to deal with what you're dealt. Absolutely. But there is a way to fix it. That's not you can.
Don't blame it on the Fed. It's the politicians.
I absolutely agree. Well, they're all involved. Yes, the Congress is absolutely involved. They're one of the biggest culprits.
The Fed has to react to the laws that the Congress makes with the loose spending to try to keep the monetary system somewhat stable.
Okay, and I would argue that the Fed has caused some of the greatest income disparity in our country. Period. So is Congress.
Well, sure, because people that use leverage understand the value of a low interest rate to grow their piece of the pie.
Oh, pause. What Don just said there is really interesting. Now, everything else is, of course, Danny, you are the most interesting person in this discussion, but let me just focus on Don for a second. What Don just said there is gold. What they need to be teaching young people. I don't know when. I don't know what age. I don't know what grade. That the relationship between money and interest rates is paramount.
Oh, absolutely.
And to grow your wealth in this country, in our system, we are an ownership society. Your path to wealth is through ownership, whether it's of stock.
Absolutely.
Of real estate, of your own business. Mm-hmm. And that right there is what needs to be taught in this country. And
the state of Florida, by the way, just mandated financial literacy before you graduated from high school.
Yeah, and I'm convinced that I don't know. I don't want to denigrate. Like, it's really easy to denigrate the educational system because just like I believe what Don is saying, that the Fed's working with the tools they have within the boundaries of the scope to which they can. I don't know if teachers across this country of ours at younger ages can teach what Don just said, because we're going through some kind of cataclysmic moment in this country where it's bad to be a capitalist. It's perceived as bad to
evil,
be owning things, to want to aspire to have higher. And it's gotten convoluted where people's philanthropic is negated. Like you can only be, in my opinion, philanthropic and giving and all the other things that come with the success of ownership if you actually have it to do. You know, a lot of people pan Howard Schultz, now the new the now CEO of Starbucks, and whatever. But he's got and a lot of people do not like Starbucks because of some of the things that they've done in the past politically and have Howard Schultz. He has in like the top 10 things when a new employee checks in. I don't know if it's still there, but it's in one of his books that he written. We can't do any of the good things we want to do if we don't make money. Like they have to make money. You can't do great things unless you have the ability to control your destiny, and that comes with ownership.
Well, that's a totally different point. What does that got to do with?
On.
Well, it is related because it's impossible to keep the rich from getting richer because of the way compounding works. If you have $1 million and you make 2% return, you made $20,000. If I have $100,000 and I made 10%, I only made $10,000. So your return was 80% worse than mine, but you got richer than I did because you started from a higher base. It's impossible for the rich to not get richer unless you suspend the laws
I get all that compounding. I get all that. No,
confiscate wealth.
Here's what I'm talking about, guys. We've gotten off track. Here's what I'm saying. The Fed has artificially engineered rates almost down to zero, way below anything historical means. Then you got big hedge funds, big leverage that borrow with that cheap money and then go lever up and do stuff. And then you get derivatives and it makes things out of whack. It causes economic distortions. Don, in the 70s and 80s, when we had normalized interest rates, or 90s, you still had capitalism. You still had people making money. It's not like that. It's
do
just
you know how tight it was for lending money? Financial institutions wouldn't lend money back then. I graduated in 1986 from college, and the bank that gave me a job wouldn't give me a credit card because I had no credit history with them. Now, kids in college, they can fog a mirror, have 3 credit cards by the time they graduate. Credit's easy.
And you think that's a good thing?
Fed has low.
And you think that's a good thing?
I didn't say it wasn't a good thing. I didn't say it was a good thing. It's a thing. And it's the genie's out of the bottle, and you deal with the realities. It's like me saying I want to be a professional athlete. It's just not going to happen. It is what it is, and bitching about it doesn't do anything with it. That's why all we do is look at the charts, complaining that gold's
no, I agree with that.
This is manipulated. If the government didn't overspend like drunken sailors, the Fed wouldn't have to keep the interest rates low so that we can afford the debt. Don't blame the Fed, blame the government.
Oh, I think they're both to blame. I'm saying that. They're both to blame. Anyway,
let's move on. To the other. One reacts to the other.
Real quick, I want to put
a bow.
The Fed
has to react to the government spending.
I'd like to put a bow on what Don said because it's really important about starting from a higher base. What Don just said is the constitution behind Revere Asset. So we have a sell discipline. That doesn't always mean that you make money on every trade. We honor thy stop, so to speak. And what that allows you to do is start from a higher base. So the greatest example, the easiest example is COVID. The 2 different portfolios went down 6 and 8% respectively. The market went down 35%. So during that time frame, March, first quarter of 2020. When we emerge from that, we're starting and compounding from a greater asset base than everybody else who bought and held and just wrote it out. What Don is describing is the absolute constitution of Revere Asset, allowing our investors, allowing our investors to continuously, throughout their investing life, throughout their investing career, start from a higher base. And to lose that point, I think, would be negligent on my part. I will move on. So now, there is one other thing going on that's super interesting this week, and then we'll get, I was about to get to the market, that I don't think the market's falling apart here. Tim, why don't you think the market's falling apart here? Look, it's interesting. The VIX futures are down today. Markets pulling back, right? You had a big sell-off end of the quarter. There's a lot of worst quarter since March of 2020, right? And then the opposite side will say, well, then you know what happened after March of 2020, don't you? I don't know if that's going to take place. There's a lot. It's a much, much different dynamic. But VIX futures are down. And if you look at a chart, say, of the S&Ps here, you're at the 8. You're holding the 8 EMA. I think that's a victory from a massive move from low to high to come back and hold the 8. When you have all this news, and this is what I was building up to, you have all this news out there that's negative, and yet here we are just back at the 8. That's what uptrends do. And if the market was inverted, the VIX futures were inverted, I'd be saying it's a much more bigger warning signal out there. But one more interesting thing before we get to Hunter with his watch list and then Don with setting up the 21 over 21. I don't think the sanctions are doing what they're supposed to be doing. And I say that based on the Russian ruble. And I was talking about with this Danny. Danny's going to cover this for a few seconds here. The ruble is back to pre-war levels. And look, I'll put these links in the notes. You can read the things I sent over to Danny because I wanted him to discuss it. But let's see if this pulls up here. The rebound of the ruble is what it is. And even Politico here, Biden crushed it. The strength in ruble is reinforcing the argument that we need to take greater steps on the energy side. And this is what people don't realize. The ruble, got decimated in for a 24 to 72 hour period. And then where it went from 70, 80 rubles to
down to 120, yeah.
It'd be greater than that. Like 170, I think. And 170 rubles to make $1. And now it's back to pre-war levels. And so that thing, I think that maybe the Russian economy is in trouble. Like these sanctions I don't think are doing, it's been 36 days, 38 days. And shorter than when we put these sanctions on. But what's going on with the ruble, Danny? Because I think it does play into the geopolitics and what's going to happen with our rates.
Well, look, there's so much disinformation out there on both sides, both from Russia and from our own government. I mean, the question I have is, are we being lied to? So we have put in restraints and we put in restrictions on certain sectors of the Russian economy in certain areas, but we're not doing it everywhere. And we've just recently banned their oil and gas imports, and so is the UK, but EU hasn't yet. And Germany and Italy, 40% of their nat gas and 30% of their oil come from Russia. Now they're talking tough and they're talking like they're going to go along, but it's really going to hurt them and hurt their economy if they do, because they don't do it. Russia, on the other hand, has forced all the exporting companies to transfer, to exchange 80% of their revenues from sales and whatnot into Russian ruble. So they're making businesses buy the ruble, okay? They're making countries and companies and people that want to buy their oil, because people need their oil. They're 12% of the oil globally, right? They produce 12%. So these companies and these countries, Russia's saying, you got to trade. We're not doing the petrodollar. We're not going to sell you the oil in U.S. dollars. You got to buy ruble. You got to exchange it in rubles.
Right.
So now they're forcing a demand for their rubles. And, China and India are still buying oil from Russia. That's 60% of their total economy. So as long as they got that spigot turned on, they got money to fight the war. And they've done some stuff. So, all these articles about how I even read one of the ones you sent said that, well, just because the Treasury Department, their quote was, they said that just because the ruble has come back didn't mean that it didn't work. And I'm thinking, yeah, price is truth then. The Russians are no. So at first, Russian citizens were rushing to exchange rubles for anything else, gold, dollars, whatever. Now that's slowed down. Now they also put restrictions on letting them do that, especially in U.S. dollars. Okay, but they are needing it. And here's the other thing: We cut off of their big, like 6 major, big conglomerate banks that are globally connected to the SWIFT system that move money back and forth. We stopped one of them, but they've still got 5 open. I mean, if you're really, really serious about choking them off, maybe you do 4 or 5, maybe you do all 6, but they still have a lifeline. I mean, we're talking like we're really just completely cutting them off, but that's not the reality. A perfect example. World War II, Congress, that ethical body, gave companies exemptions to sell to Hitler. So Ford was selling truck parts and tank parts. Lockheed Martin was selling airplane stuff.
Up until when? Until 1940, until December 7th, 1941?
No. Through the war. I'm saying our American boys were dying and our corporations were making money. We could have starved Hitler out in 6 months, a year. We were selling him fuel, gas, and repair parts for all his munitions. That's public record. You can go look it up.
Okay.
So you didn't know that. So here, in the same kind of situation, I'm not sure how tough we really are being versus our rhetoric, our talk. And like you said, I'm not sure it's a great, I'm not being, I'm just saying, I'm not even sure it's a great idea if you did completely cut them off, because then you've set a precedent where, like you said, who's to say if it's a company, oh, we don't like them, we're just going to shut them down, or an individual. So finding the truth in there is really hard to discern because, quite frankly, everybody's lying. Our government, the Russian government, the Ukraine. I mean, everybody's trying to win the marketing campaign. This is a lot of this is a marketing campaign, and that's why we at Revere and everybody, you really need to rely on price. Price is truth. Price will tell you what to do.
An important part of that, just before we move to Hunter here, is you might not agree with what price is telling you.
Yes,
and you got it. Like, I have a chart of Tesla up on my screen. I think this is one of the most pretty hourly charts you could watch in the entire market. Don, you still have your position in Tesla, right?
Yes.
Yeah. I wanted to make sure. I love this chart. Like, this is a beautiful consolidation. When the market is pulling back, Tesla is up 1% today, and they've got Q1 numbers coming out, I believe, tomorrow. Saturday morning they'll release how many cars they sold, and maybe that's why it's holding up here today. But that General Motors and Ford would love to be in a position. Do you realize Tesla authorized a split? Let me just show you this real quick. So if you really want to know what Tesla split, I know it split a couple times, but the most recent one was what, 2020, 2021? If you put
August 2020.
I believe it's the number 7. They did a 7-for-1 times. And I think that's the. Oh, it was 5-for-1. Thank you. Appreciate that. Let me see if I can look at the price of Tesla. It's $5,400. It's a 50. If they didn't split it, it's the equivalent.
More than Amazon, right?
It's a $5,500 stock, and that's Tesla is capitalism. Everything can run amok, but we should. Don hit on something extremely important earlier in the show.
Have they announced the ratio is split yet, or no? They just got approved. Yes,
they're just looking for approval to do it.
Yeah, and what they're going to do, they're going to divide it so that they can go on the Dow, I think.
Well, I wonder if the Dow will let them in. Seems to be a pretty exclusive club that people are trying to get into right
now.
The
Dow wants the best performing stock so their index looks good. The Dow wants Tesla.
Yep.
Okay, fair enough.
Tesla, Amazon, and Google.
Yeah, interesting that finally all of them are starting to want to be in the Dow. Interesting. Hunter, what you got, man? I am sorry, Hunter. I haven't gone to today. I apologize, but man, that was that's why the show was unscripted. This has probably been our best show, and that discussion that you and Don had, I think, is really important because I think I think you've addressed things on both sides that people think about when they listen to our show. And boy, that was just a really good job. So Hunter, I apologize, but give me what you got, man.
So Hunter's not here.
Oh, I just did that whole soliloquy.
You were covering great, and I was hoping he was going to come back. There he is.
There he is. Hunter. He made his
You're doing
appearance.
good. Yeah,
he
yeah.
made an appearance.
Did you even hear?
That was his grand entry.
I did.
Okay.
Yeah.
I did. I had cut my screen off because I stepped away for a quick second to fix something, and I guess I had not turned it back on. So I'm sitting over here listening and watching, but you guys just can't see or hear me, so that's good.
Fair enough, man. What you got?
So I'm going to start off with some statistics here as opposed to necessarily a watch list. However, all of these ticker symbols that I'm about to go over here are obviously going to be at the forefront of most everybody's focus. So, Tim, if you could just stay on Tesla or pull up Tesla, one of the two.
I got Tesla here.
All right. So Tesla, what I want to point out here is
the
an hourly
stock
chart market and individual stocks tendency to perform well in the month of April. So we're talking a little bit about seasonality here, and I'm going to put some statistics with it to give you some color on that. So Tesla, since its IPO in 2010, has a 64% win rate in the month of April, meaning it's positive or it's green 64% of the months since its IPO, or 64% of the April since its IPO back in 2010. Amazon, which is my next one here, and the rest of these are going to be since the Great Financial Crisis, so since 2009. Amazon up 85% of the time in April since 2009. Apple up 69% of the time in April since 2009. And this is the kicker here. The S&P 500 or SPY up 92% of the time in April since 2009. So only 1 year, or one out of the last 13 that have been red for SPY going back to the bottom of the Great Financial Crisis. So the point here is April historically, at least since 2008, 2009, that Great Financial Crisis has been a very good month for the S&P 500 and a very good month for a lot of these key stocks to the market. Does that mean that that's what's going to happen this April? Of course not. But you do want to just be mindful of those statistics. I mean, if the S&P 500 was down 92% of the time in April, that's something that you would want to be aware of, just like I'm bringing this to you here. So I thought that was interesting. I know people say that a lot. Oh, the market tends to do good in April. Tim, you've talked about the jumper trade here at the end of the first quarter. Well, there's some actual statistics over the last 13 years in this big bull market we've had showing how often several of these huge key companies are positive and the S&P 500. So I just wanted to share that with the listeners. I thought it was some good info.
By the way, Hunter, by the way, that even though you went back, 15 years or so or whatever, it actually has done that for decades. In fact, that old adage in Wall Street, I even heard it as a kid, sell in May and go away. So theoretically you hold through April, and then after that it gets tougher. Anyway.
Yeah, that is the old adage, and I've heard it too my whole life, and I've seen it play out, in my professional and investing career, that April does have a tendency, at least in my lifetime, to be a good month. So moving along here, Tim, will you pull up URA, uranium ETF, for me? And I believe I talked about it last week. It may have been the week prior. I'm not sure. But I know I pointed out that there was some major volume here on these uranium ETFs. You can see that at the bottom of Tim's screen there, those big green bars. This is actually, URA is picking up a cup and handle pattern recognition over the last 6 months or so. And it respects trend lines much more than it respects moving averages, and commodities have a tendency to do that. So keep that in mind. But this one bounced off the trend line on the 29th. That's that big hammer candle you'll see on URA over about 4 days ago there. And it's got back above the 8. There's some pretty big volume here. It looks like some accumulation, something going on with the uranium space. And Tim, if you want to pull up the leading individual name in the uranium space, it's CCJ, Chemico Corporation. And you'll see this chart actually is stronger than the uranium ETFs themselves, but just be mindful that these are very high risk, very volatile ETFs, and this name in particular has the ability to be up and down 10% on any given day. So keep that in mind, but nonetheless, there's big time volume, appears to be big time accumulation and big time relative strength in the ETFs and in this individual name here. And then Tim, my last thing here is the travel and leisure booking sector. So if you could pull up Airbnb, you'll see this one has handled nicely after a gap up earlier this week. really showing some good relative strength over the course of this week too. I know you guys can't see it, but if you look at a RS line in MarketSmith over the last 4 days, Airbnb's RS line is angling up at a pretty much a 90-degree angle, meaning it's hanging in there better than the market. And then similarly, EXPE, Expedia, also has hung in there really well over the course of this week. Had a nasty reversal early this week, but same kind of story more or less as Airbnb. That RS line angling up pretty sharply this week as it has consolidated and shown some relative strength versus the S&P 500. So that is all I got today, man. That's it.
Awesome. Oh, I loved it. Don, what you got, man?
Yes, sir. 2121 list, only one stock coming off of it, and a second one in favor of dropping. But I think that speaks to the power of leading stocks. A lot of them got extended too far to the upside. These last 2 days have felt like a very strong sell-off, but we keep an eye on Fibonacci levels here in the market. And basically what that is particularly on the indexes, is when something moves up a certain percentage and it gets a little bit too stretched, it can pull back a certain percentage, and they're considered very normal pullbacks. So that's a perfect chart that you're showing there. The recent moves in the S&P and the NASDAQ 100, there are 4 key Fibonacci levels that we look at. The first one is a pullback of 23.6% off the top, and we haven't even touched that. So considering that something went from $10 to $20 and it pulled back 20% off of that, that's a completely normal pullback of that 100% move. So although it stung a little bit the last couple of days, it's completely normal in context. And then the next big Fibonacci levels is a 38.2% pullback. And that's where it should, if we break the 23, that's where we should stop. So the point I'm trying to make is that the markets have run up very strongly over the last 2 weeks. Some pullback is normal and needs to be put in context with how big the move up off of the lows was. I think leadership in the stocks is bearing out how much the strength was in the fact that they're pulling back and still really haven't broken any key levels is important. But as always, we're keeping an eye on everything. This morning, Friday morning, it's 11:20 Eastern time. The NASDAQ is weaker than the rest of the indexes, but the G6 that we watch, that's a 6 growth ETFs that keep their finger on the pulse of mid and small growth stocks. Every one of them is green. So we're seeing some outperformance in growth this morning, in particular in some cloud stock names. So always keeping an eye on what sectors are overperforming and underperforming. And we pulled back a little bit. We had a couple of things hit stops, but for the most part, we're still engaged in the market, showing profits in most everything that we hold, and we've got our stops in place as always.
All right. Don, quarter end video.
Yeah. You made a point earlier about what we are committed to here at Revere. I've been saying throughout the first quarter how risk picks up when we're under the 200-day moving average, and we've been very defensive during that period. Our maximum drawdown was about 5% off of the top from the beginning of the year. The NASDAQ 100 was down 20%. The S&P was down 12.5%. But our commitment to capital protection did its job. We're always going to lag when we pull off of the lows quickly, as we did starting with March 14th. But what I'm going to talk about in the video is how our process worked in the first quarter, kept us out of the way from any severe drawdowns, and then we were able to re-engage when we got the proper signals to get back in the market.
Awesome.
So that'll be recorded over the weekend and sent out early next week.
That's a detailed explanation of the quarter for clients.
Right.
Hey, Zach, go to my screen real quick.
That's correct.
Thanks. And if you want to see how we separate ourselves even further, we delineate pretty well against what we call the big firms or strip mall advisors. And just go to revereasset.com and you can just scroll down and you can see exactly what I'm talking about. So with that, Danny, I think it brings us to the short close because I've got one more thing. Now, do not go long. We went long with your discussion with Don, so due to time constraints, would you please do the really super short?
Folks, if you like what you heard, please tell a friend, tell a neighbor, just send them to revereasset.com. Tell them to hit the subscribe button. They'll get our daily market insight video. Every night the market's open around 5 to 7-ish when it's completed. It's a short market video showing what we're looking at, even some buys and sells we've done, as well as the overall health of the market. You can always call us at 855-REAL-WEALTH, and you can email any of us at dan@revereasset.com, Don, Tim, or Hunter at revereasset.com.
And if you're like, hey, I missed that phone number that you just talked about, look, you go to Revere Asset, just hit the little phone button. It'll connect your device right to, it's a hotline to Dan.
Oh, yeah. Right there in the bottom left, little phone button.
It's an HTD.
Hotline to Dan.
Yeah,
It's
not
like
an
the
STD.
bat phone.
It's an HTD.
Yeah, I don't want an STD.
No, you want an HTD in your life. I got Hunter. That's all I need.
Hunter got it.
That's all I needed, man. Don't get an STD. Get yourself an HTD.
Seal of approval.
Oh, yes. That's seal of approval there. So let's do this real quick. I failed to bring up this chart. This is the one, my one last thing, and then we'll end the show here. This is interesting to me. When the the market's pretty negative here. Like the sentiment is pretty negative, right? Mm-hmm. And I was about to say I'm in Hunter's camp. I don't think Hunter's in a camp. Hunter is presenting facts.
Right.
That's different. Was this week enough to wash out bullishness? And that's what I've been wondering. I kind of think the put call is still broken. Put call ratio got broken. I used to love using this as a tool. After they did all the stimulus, the put call ratio just got completely broken. But this is still interesting to me here, and I'll just highlight this. The 10-day moving average, the put call is still, it's pretty low. And when it's been down this low, markets have pulled back. So I'm not calling for an end of the world sell-off. And maybe the markets pull back a little bit even more. Who knows? But markets don't have to pull back. And this jumper trade could set the tone for the whole month. Like if I think you get some strength here. Obviously I think you can get some strength into the next couple of days. A lot of people are still bullish though, based on this. If this is not a broken tool, it's interesting how even the last couple, a lot of stocks though in quarter one got destroyed. Like if you look at the PayPal's of the world destroyed.
Oh, some of them are,
Yeah. And maybe that's enough, right? But a lot of people, based on this chart, if it's not broken, are really still bullish. This week did nothing to deter them. And that I find very interesting.
Folks, we'll talk to you next week on Your Money.